Hey guys, welcome to another video brought to you by Total Control Traders. I do apologize for the prolonged absence. It's been a while since we brought you guys with any videos, and there's a reason for that. It's daily videos. It was getting a bit too much, and with the viewership, we are going to focus on any important events or things I am seeing that are worth noting in the market going forward. And that's why today will be the first one of the potentially important movement in the market. And I do apologize if my talking is not as smooth. It's been some time since the last recording, so bear with me. If you know anyone that can potentially benefit from the content that we provide, please consider retweeting and sharing our channel. As for those of you that have watched the last video or the recent videos on March 25th, I had exited the bear plays that we entered from up here and exited on March 25th based on this bounce. So what I was seeing particularly on March 25th was the reversal beginning to happen at the 0.5 of the fib alongside in confluence with the key zone, the top of the key zone. And from there, it has been straight bullish action since. So why am I coming out with a video today? Now, I'm going to answer that in a few steps, but first of all, let's go over the market first. There's something wrong with the RSI lately, and keep having to refresh it whenever after I change my time frames, but whatever, it's working now. So, all right, SPX. We're gonna go over SPX and SPY first. So the last time I was looking at this with potential red flag was April 29th, but there was not significant red flag, not enough for me for it to warrant a video. But now, even though it's after 2 days of decent drop, I do see some red flags that are showing up. First of all, now this bear divergence, you can see RSI here. Let's draw this. So this bear divergence had minimal follow through. And as tweeted on Twitter, for those of you that follow, for those of you that don't, make sure to check it out. It's at _TC_traders_. So what I posted here was two major zones that must hold. And let's move that over. So first zone being in the 4180 area. And then the following that is 4120. Based on this bear divergence, we bounced from 4120, and that was okay, because if this zone were to be lost, if we were to close under this zone, I will be looking down at the GP, which is in confluence with the previous all-time high backtest. As you can see from here, since the 0.5 fib bounce, we have not had a previous all-time high backtest yet. And if you were to look back at any of the previous all-time highs, back tested obviously. Now even if we were to look at the weekly time frames, this previous all-time high made a new high, back tested, and went down even further. Where would it be? Let's see, new all-time high. They all get back tested, doesn't matter which one you look at. Okay, now if you look at the longer time frame, that's where a little bit of a concern comes in, because we made this new all-time high, and then we came back, made a formed a W formation, W pattern, and then we went straight bullish action. Never came back to back test this particular previous all-time high. This was back tested based on here, but this was never back tested. Okay, now if we were to look at the daily on a shorter time frame, this is what we're looking at. Before we get to the weeklies, let's look at the dailies. This previous all-time high has never been back tested. This one has, this one has. Same with any of these previous ones. But this most recent one, never been. Okay, 0.5 bounce, straight bullish action into, we're still watching this rising megaphone pattern. Okay, and the rejection on April 16th was right near that top trend line, that upper trend line of the rising megaphone. Then we almost touched it again, but formed the bearish divergence, bounce from the second must hold zone, and then today, early today, we saw a loss for the first time of that zone. Now, another trend line that you want to be watching would be this pandemic trend line, pandemic low to the W formation low, and we saw a support here. Then we lost it a little bit, but immediately bought up, and then we saw a little bit of support here again, and we are seeing support here as of today, tomorrow after, or today after our tomorrow. We are seeing a little bit of support here right now as well. So this blue trend line. Now this one I'm keeping it on the chart for now, just in case that it is still relevant. Because if you look at it, rejection, rejection, another rejection here. So it is still considered a strong trend line. But the first one we're gonna need to break is 40-20 key zone in confluence with this pandemic trend line. Following that, we will probably see a little bit of a bounce from this other trend line that was previously the upper trend line of the wedge, the long-term wedge, you can see here. Okay, then following that, we would be looking at new previous all-time high backtest. So that's what I'm looking at for bear thesis. Bull thesis, there is still a lot of bull out there, and I'll go over the reason why I'm looking bearish now. Bull thesis, we still never closed under the 41.20. From here, we are going to bounce from, or there's potential bounce from this pandemic trend line straight back up into new all-time highs. The likelihood of that is a little bit slimmer, because if you look at this, there is a more prominent bearish divergence that has formed on the new all-time high yesterday. So that's this one. There is another bearish divergence, and we saw decent follow through following that bearish divergence. Now let's take a look at closer time frames. Why? Reason one why I'm thinking there's going to be a little bit more bearish action going forward following this bounce. Now if you look at previous dips, it's just been dip straight by V shape. Okay, dip straight by V shape plus more. Same with here, dip straight by, okay, and dip straight by, dip. There are lots of V shapes when you look back. That is very clear bull market. Okay, big dip, big buy up, big dip, big buy up. Whereas now, big dip or bigger dip, we're potentially seeing a buying up starting. So that's the bull thesis. We're gonna have to see what the follow through looks like. Bear thesis is what I'm looking at is we made lows at 6 o'clock. We got the buy up plus a little bit more, but then there was another sell off, and then market opened, market opened around here. There was a straight buy up, but then 8 o'clock straight sell off. Let's take a look at the 30 minutes a little bit easier. So 7:30 market open, nice dip buying, but sell off plus more, and then continue to sell off below the 40-20 key zone. Didn't close under it, and then there was the buy up. But now we are not seeing that straight buy up action yet, at least not yet, from what we have seen before in the clear bull market. Now, as mentioned before, what I generally look at for a trend change is 30-minute, 1 hour, and 4 hours. 30-minute has been, you can clearly see a trend change to bearish trend now. Lower low, lower high, lower low, lower high. Hourly, same thing. Lower low, lower high, lower low, lower high, and then lower low again. 4 hours is the confirmation that we're waiting for, basically. So right now, we made the lower low on 4 hours. we're gonna need to see if there's gonna be a lower high. I'm thinking, looking at the 8 hours, 8 hour ADMA. Let's draw a fib here and get rid of these two. So I'm going to be watching, first of all, reaction at the 0.382, following reaction around the 0.5, which if you look at it, there's lots of wicks on that 0.5. Okay, resistance, broke over, rejection, multiple rejections again, multiple supports. So that 41.76 is a very key price to watch for, and be watching for a rejection somewhere around the 0.5. If we were to reject from the 0.5, even if we were to reject from the key zone or the GP, I would still consider it bearish market. But from there, of course, the lower we reject from, the stronger the bears. From there, I'm going to want to see a lower low with a close under the 41.20. So that's SPX. NAS is now a clear bearish trend. 8 hours, even the 8 hours, you can see lower low, lower high, followed by lower low. Where we're bouncing from, however, is the key. So with NAS, I've exited, took profit from SQQQ today. Entered here, exited somewhere around here, can't remember where, and then entered on this candlestick again and took profit today. So reason why I took profit is, or let's go over the reason why I entered. Bearish divergence. Oh, that didn't stay. Double top slash bearish divergence, whatever you want to call it. Clear bearish entry area right around there. And the reason why I exited today is we're bouncing from the GP. So GP from the move of right here. Last time we played bear, we entered somewhere around this candle, and this is the same day that the SPX started bouncing. So NAS was at GP, SPX was at 0.5 and key zone. That's why we exited bearish play. And now, since then, straight bounce. We're bouncing from the GP right now. Tomorrow into, what's tomorrow, Wednesday? Tomorrow into Thursday, into the end of the week, we'll likely be re-entering bearish play on SQQQ. But gonna want to see where the rejection comes in at. So we're bouncing from GP on NAS, and the reverse GP. So the reverse GP is right at the top of the key zone. Okay, this chart needs a little bit of cleaning up. Actually, that might be useful still. So let me see. Yeah, don't need that. Yeah, so I'm going to watch for a reaction around similar idea, 0.382. NAS, I would imagine the bounce is going to be a little bit stronger. 0.5 in confluence with the lower part of the key zone, followed by GP in confluence with the top part of the key zone. So the other thing that I want to look at, so far we've only discussed reason 1, not seeing the clear dip buying that we have seen on SPX. Reason 2 is going to be after this. But before then, we're going to discuss QQQ IWM first. So QQQ IWM, we saw a double top, 1.91 back in 2000. Then following 1.92 at August of 2020. Since then, it has been a straight sell-off. Now, we're seeing a bounce from this trend line, long-term trend line. Saw the bounce right there. And we're seeing a rejection. You can see trend line here and rejection. This was the reversal candle, and this is what caused me to play SQQQ based on this shooting star hangman candle, and then following same thing and now we're seeing a little bit of a stall around that support area. Support area is going to be here. If this is lost, I would anticipate further downside, meaning QQQ weaker compared to the Russell. All right, let's discuss reason number 2. Reason number 2, DXY US dollars. Now this is not a clear trend that we're seeing, not as clear. So US dollars, we were watching for this channel. Then we saw a breakout fake out, decent bounce from the 0.382. Decent bounce from the 0.382, making new all-time highs, clear breakout. But from there, we saw a straight sell-off back into this lower trend line of the channel that we were watching before. A bounce from there, and the bounce was weak. Didn't even get to the 0.382. Then from there, we saw a continuous sell-off. But now we're at the lower part of the key zone. If we were to go on weekly, you can see the upper part, there's clear supports and resistance. The lower part, not so clear. There's been a bounce here. Okay, there's been a bounce here. Some wicks over here. It was a little bit harder to find the lower part of the key zone. A little bit of rejection here. So, I'm watching, going to the rest of the week. This is a potential red flag that I'm going to be keeping a very close eye on. US dollars, I'm going to see if there's going to be a bounce that's starting here. If there is, that's going to be red flag number 2. Number 3, US 10-year bond yield. We're right at that top upper trend line. There's 2 potential trend lines that you can draw. So let's see how this works. We did reject from this one before, but we can see clear rejections here. So we're right at that resistance zone, trend line zone, whatever you want to call it. Coming up to that upper trend line, potential for rejection. And since this bearish divergence that we were watching before, since this bearish divergence, it has just been straight sell-off. Not as prominent, not as clear sell-off comparing to SPX kind of type of sell-off, but there has been sell-off. Regardless, trend, we made lower low, lower high, lower low, and let's see where that lower high, or is it going to be a higher high? So keeping a close eye on this one as well for potential red flag number 3. VIX, nothing really to note yet. We are bouncing from that long-term trend line, not as clear of a trend line. You can see multiple bounces here. Let's do the weekly. And I do apologize, the VIX chart is a bit messy. I like to keep the chart just to remind myself, what patterns I'm looking at. But let's take a look at VIX chart. Clear support here, support again, and we had a few closes under, but there's support back here and here as well, and we're seeing a bounce from that trend line again. Now we are seeing a rejection. As of today, we're seeing a rejection from that key zone. Previous resistance, you can see lots of rejections here, lots of support here as well. So this is a Interium key zone that I'm watching. Saw a little bit of rejection from it today, gapped up, straight run, and then rejection. So with VIX, generally when it starts moving, now we could be looking at this. Generally when it starts moving, you should see a little bit more follow through. Let's see. Yeah, I can see a move here. We're gonna see what's gonna happen over the next couple of days into the end of the week, because I do see a curve forming here, and you can see a curve forming. Every time the curve forms, there's a little bit of a decent move that goes on, and timeline wise, it does make sense as well. 70 some trading days, 50, 60-ish, 40-ish, 60-ish. Yeah, so timeline wise does make sense as well. I'm gonna want to see some follow through tomorrow, at least before the end of the week. But tomorrow potentially you come back to gap fill before an actual move up. But overall trend, you should see a curve upwards. And then if we do, then watch for a reaction around that trend line. VIX is not going to be as clear rejections as most of the indexes and tickers that you watch. It's not going to have straight rejection. You can see breakout, fake out here, breakout, fake out here again. And even if you were to look back, this one's fairly perfect. Broke out and then back tested before an actual move. This one was okay. You see a little bit of a breakout, fake out there too. So yeah, VIX doesn't respect trend lines to the T as the indexes and tickers that we watch do. But overall, seeing one red flag showing up so far on SPX, not seeing the dip buying that we're used to seeing, and keeping an eye on that number 2, number 3, potentially number 4 red flag. Now another leading indicator that is showing red flag already is gold has been on the rise. So we enter gold right here. No, sorry, it wasn't the bottom. It was this candlestick actually. Yeah, this candlestick, because I remember the next day it dipped. This candlestick, because we were watching for this pattern. And the reason why I entered this candlestick is I was looking for that bounce around the GP, which we did see. If you zoom in, we did see a wick that day from the GP. So I was looking for a bounce there, but the next day it opened up and then it just continued selling. But regardless, we've been in since here, and this has been a 7.8% run. Now on the calls that I can't remember, it's June or July calls, it's already up 150%. So congrats to those that followed this call out. Just to jog our memory, I was looking at similarity between these two patterns back here. If you look at this, this was a bull flag. Ultimately, could be a monthly bull flag, but a little bit of a consolidation. Next run up, and then sort of went sideways with this support being held the whole time, and then making a U to the resistance again. So a little bit of consolidation here and run up, and support being held, and now we're potentially seeing that U shape. So if we are seeing that U-shaped recovery, see rejection here, I would anticipate the price movement to get to around the GP 1923 to 1965-ish before the rejection and continue the sell-off. This would ultimately, it should mean a bullish market. So let's check SPX afterwards. This is September 2012 all the way to June of 2013. 2012. September of 2012 all the way to June of 20. Yeah, so gold is ultimately a leading indicator. You can see that we had a big, somewhat of a dip back here, but then it became ultimately a bull market until June. Okay, so leading indicator on gold, with gold going up, that is a second confirmed red flag on the market. And Bitcoin, I'm hearing that, you know, you can use this as an indicator on the market. It synchronizes with the market, but I'm not seeing the correlation personally yet. For those of you that do use Bitcoin as leading indicator or indicator for the market, you can see that the Bitcoin made lower lows, and now we're looking for that lower high potentially. Yeah, I would anticipate a lower high before further price action downwards, stalling around that GP right now. Watch Bitcoin. If we're to break GP, that would be bullish scenario. From here, if we're to continue to reject from the daily 8 or unable to break GP, I would anticipate further downward price action into this previous all-time high backtest 42,000, which still lines up. Let me just make sure here. Yeah, still lines up with the GP. So it makes sense that we're going to backtest there. 42,000 mark. All right, so that's it for today's market recap. Keep an eye out for those indicators. We have 2 confirmed red flags, and I'm watching for the 2 major ones that I usually keep an eye out for: US dollars as well as US 10-year bond. The other ones are already confirmed. Don't forget to give a thumbs up. Hope you liked the video. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos whenever there is important market events, important market red flags. Keep an eye out for our video. Spread the word about our channel if you can. That would really help. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts with the most recent result of 100% correct callout between April 15th to April 30th. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.